Hi, so very warm welcome to everyone. Thanks for joining the call. If you're listening to this as a recording, thanks for doing so as well. Hopefully, you're going to get a lot out of the next hour. If you are here with us live, I really look forward to having your questions that are coming through. As you know, this is a rearranged session. We're very happy that Mounir was able to go and find a new time for us to go and chat with him and hear about his story. I've been looking forward to it for some time now. For you, if you don't know, Mounir Nakhla is the co-founder and CEO of MNT-Halan, Egypt's first unicorn, and perhaps still its only unicorn. We can ask about that in a bit. I'm hoping to learn a little bit about the sector in Egypt, a place that I've visited many years ago, but know very little about. Let's just start with today with a warm welcome, Mounir. If you'd like to just give us a quick intro to yourself and tell us a little bit about MNT-Halan for anyone that doesn't know what this company actually does.
So my name is Mounir Nakhla. I'm the founder CEO of MNT-Halan. I started my journey 2010 selling 2 and 3 wheelers on credit. And then this grew into into providing financial services for micro and small businesses and consumers and individuals. Today, we are probably the largest non-bank provider of financial services through technology. So we're a fintech with an app. We're a hybrid model. We've got branches and an application. We're present in 4 countries. So we're present in Egypt, Turkey, UAE, and Pakistan. We've served more than 8 million customers. We're a credit-led fintech, so our core business is access to funding. We've disbursed north of $15 billion since inception. We have currently about 2.5 million active customers, and we've got about a loan book of $1.5 billion.
It's an incredible set of stats that you've just come out and shared with us there. Let's go back in time. I really want to know how you got to this point. I mean, you know, what you're doing now is absolutely incredible. Where did the journey start?
It depends how far back you want me to go. So it started off when I was at university and I was studying the impact of microfinance, which is what my uncle used to do back in the day. He was in the field of microfinance in a consulting capacity.
Yeah.
And when I traveled the villages and cities of Egypt, I realized there's a very different Egypt. There's a very different economy than the one I grew up in. And that was the first inspiration. Next step was founding a tuk-tuk financing business, so a light vehicle financing business in 2010. Then we developed a microfinance business in 2014.
Yeah, let's just stop about that because I mean, I like these transitions. I think it's always interesting to understand from people how to make these transitions. You know, so you've gone to university, you've studied microfinance. Okay, that's a huge step though now to go and actually start lending money. You know, with all the
So
risks.
it took me about 8 years of learning the skills of the trade. And I got approached by Egypt's largest automotive distributor, and they were launching their tuk-tuk business. They were selling about 30,000 a year. And they said, Mounir, we think if we can introduce credit to this product, we can sell 100,000 a year. And we did reach 100,000 a few years later.
Were you bought
And
in immediately when they came to you? Did you immediately sort of think, yeah, this is a brilliant idea, we're going to be wanting in, or did you take a lot of convincing?
so my initial gut feeling was, yes, let's do it. I wanted to establish a company. I wanted to be an equity holder in a company. I wanted to have my own thing that I'm driving. I had to assess the viability of the product. So I traveled about three hours from Cairo. I went to the largest village where they used to sell tuk-tuks, and I stopped a tuk-tuk driver and I told him, hey, how much did you buy this for? And who did you buy it from? And he told me. Then I went to the person who sold it to and told him, how much did you buy this for? And how many are you selling? Then I went up the whole supply chain and I realized there's about 20% margin, trading margin in the tuk-tuk, let alone the financing margin. And that helped me enormously in my negotiation with my partners, because I told them, listen, you guys are importers, I'm going to distribute and I'm going to finance, and I want a trading margin. And that changed the economics of the whole company dramatically.
Well, you're not worried about people paying the money back because, when I think about tuk-tuks, I mean, there's a few floating around down here in South Africa, and I think about maybe I don't know motorbikes in India, or I think about these cheap methods of transport. My first knee jerk, and I come from a banking background, so you're probably probably going to smile at this. We're very risk adverse, and I always think to myself, there's no real collateral, there's no security here. I can just imagine handing out the money and never seeing anything back, and there's going to be a complete loss of control. We're going to have huge default rates. There's no way I can make money out of that. You obviously saw something different here. Did you catch that?
Yes, yes. So basically, there is a security, and the tuk-tuk in Egypt was operating as a revenue generating business. So it was more of a taxi than for personal use. It was for commercial use. And the payback on the tuk-tuk was about 8, 9 months if you pay it in installments. So it made a lot of economic sense. And that's what gave me most comfort to lend out tuk-tuks. And it's
When
also asset backed. There's an actual vehicle that's worth $2,000 that you can.
Yeah, if you can find it. But now you've entered into the market. The second part for you to do this is you kind of inferred this earlier. You had to find some partners to back you. So there, I'm interested. Was it kind of like we're going in big? We're going to really try to finance 100,000 tuk-tuks, and significant financing. I don't know, $2,000 times 100,000 is a sizable number, or was it let's go and run a couple of prototypes? Let's start with the first 10 or 20, and then scale up. And if after 3, 6 months we're seeing that we're receiving income and we're learning as we're going, we can then start scaling at some point in the future.
We seeded the company for about $2 million at the time in 2010. That for me, that was a lot of money. It was a lot of money. And we then leveraged, and that was a big change in mindset. So I went to a bank. The business was going well, so we established the company late December 2009, sold the first 64 tuk-tuks in March 2010, and by June I was signing a loan agreement with the first bank for another $2 million, provide the EGP equivalent of $2 million, provided that we increase the capital a little bit. And that was a game changer, because that was my first introduction into the world of leverage. And then I said, it's a very basic principle. First, I'm making money with my own money, but then I'm making money on other people's money. And that was just brilliant for me. And then I said, oh my God, I can just leverage to the maximum.
Yeah, that was obviously banker's money. Now, the story could have kind of ended there, couldn't it? Because, you could have ended up scaling and being very successful and I guess retiring and working with others, maybe taking the model to other countries. But this wasn't enough to keep you interested. When was the next kind of, what would you call it, a pivot or an augmentation of this particular market?
So this
I really
journey
think
kept on
rideshare.
going. I said, okay, now we've got a distribution network. We have 200 locations, 400 locations. Let's add the motorcycles, cargo tricycles, refrigerators. And I just kept on adding products. And we were selling while paying value added tax, because there was no licenses for private companies to lend money. The law changed in late 2014. And earlier in 2014, the government had banned the importation of tuk-tuks for a period of 3 months, which were very tough on me and on the company. But when the lending license came out in late 2014, I rushed to establish a microfinance company where we could lend. And that was a big turning point because we started doing a very, very different product. We were doing group loans for women. And then we got into the business lending and SME lending. And that took a whole journey on its own, a whole life of its own.
When did you start to think about ride sharing?
So 2017, I get a call from one of my shareholders, and he told me, Mounir, you've done this fantastic company. It's big. You're big into vehicle financing, so you have a big stronghold on owners of motorcycles and three-wheelers and cargo tricycles. I would like to encourage you to come to Indonesia and meet the founder of Gojek. Probably if you
Mm,
ask him, he wouldn't remember this encounter, but I spent a whole day with the founder of Gojek. And at the time, Gojek was $1 billion company. They were doing ride hailing and delivery, and it was a super app. It was only established in 2015. We were around for about 7 years. And I remember we were transacting at about 150, $160 million valuation at the time. And I said, why are they so much more valuable than we are? And the bottom line was technology. Technology was picking up. VCs were flooding money into the market. Interest rates were getting less and less, and there was a lot of investment into technology. And I said, okay, I can do ride hailing. I can get as many drivers as I need. I need an application and I need to market it. And this is when I started looking for a partner, and I found Ahmad Mohsen, who co-founded Halan with me. And that was the really early starts of Halan. And Halan started as a ride hailing company. By 2019, we were doing about 3 million rides a month. And there was a lot of momentum and a lot of growth. We had introduced e-commerce onto the app. We had our own closed loop wallet. We were still learning but we were burning $1 million a month.
mm,
$1 million a month. For me, it was hard to digest. I was in summer of 2019, I was raising a $15 million round. And I said, what am I doing? I'm raising $15 million that I'm gonna burn through in less than 12 months with the growth projections. And then I'm gonna be out in the market raising again. And that was a big turning point. But at this time, the VC world were not talking about unit economics. They were not talking about path to profitability. They were just all about grow, 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 grow. What's your top line? How many customers are you serving? What's your ARPU? What's your CAC? And no one cared about a path to profitability. And I went to Ahmed and told him, listen, something's wrong with this ride hailing business. If we increase the prices a little bit, rides go down. If we reduce the driver incentive, drivers stop working. And I'm seeing a behavior I don't like, that if they're doing 8 rides a month and their incentive is 10 or 12 rides, they do 1 or 2 rides with their family members. And I just don't like the way it looks. So he told me, what do you suggest? I told him, what I want to do is, I've got the lending business. We're big on lending. And the lending will not scale without the right technology. All our systems are breaking down. The data entry is not working. The process is not smooth. It's not seamless. And if we put all our energy into financial services, it's going to be a game changer. And honestly, Ahmed's buy-in was incredibly important, because after Ahmed's buy-in, I had to approach 2 sets of shareholders. One set of shareholders that are focused on profitability and a solid company, a finance company, And then I had to approach the VCs and the tech shareholders. And these guys told me, why do you want us to partner with these guys? We're gonna disrupt them. You're gonna do your ride hailing, you're gonna grow so much, and then you're gonna do financial services. And the other guys were telling me, why do you want us to buy a loss-making company that has 70, 80, 90 engineers and a big brand name, but it's loss-making and it's a big loss. And the only way forward was to raise fresh equity and to buy whomever didn't like my vision. And the only caveat is that all this was happening in Q4 2019, and COVID hit in February or January 2020. So right there when I'm raising the money and I'm getting fresh money to buy everyone out and put it all under one umbrella and launch a big story, I get hit by COVID. And I
Okay.
had to practice patience and meditation and do my sports to get through that period. Because even with COVID, the loan book quality was deteriorating because people were not paying, markets were closing, businesses were shutting down. So really, when you think of the company, it's really inside the whole economy and inside the whole other ecosystem that if it's compromised, you're de facto compromised. We managed to close the round in 2021 and put it all together under one umbrella. And we raised $120 million, most of which went to secondary transactions to buy off shareholders who didn't want to put it all together. And or who wanted to de-risk or whatever. And since then, it's been an incredible ride because during that, now we put our proprietary core banking software, Neuron. So that's built on microservices. Then we added on a wallet, open loop wallet to enhance transactions. Then we grew our e-commerce a bit during that period. Then we introduced savings and investment products, money market funds that are growing incredibly fast. We introduced the Halan.
You make it sound so easy. We're going to have to unpack a few of these things, hey? So
Sure.
let's just take a pause there and go back. I'm interested at the point where you found and then took the decision that Ahmed was the person to co-found this pivot with. Tell me about that because that's really hard. Finding a good partner to go and set up a new business can be the death knell for many that have tried. Others say they don't want a co-founder; they want to employ someone, or they outsource to the tech, and they just want to keep it all to themselves. You went through a definite decision process that you wanted to work with someone as equals. Why was that, and then how did you find Ahmed?
So Ahmad was recommended by a friend, and he was further recommended by the top VCs in the country. In the beginning, I knew he complemented uh, my skill set enormously with some overlap, but very little overlap. We're very different in the way we operate, and he has a very cool demeanor, a good sense of humor, great social skills, and he's a math whiz and a tech whiz. So this combination, there was just chemistry. It took me a while to convince him. So he started
Mm.
off building it through his company at arm's length. And then I told him, listen, let's acqui-hire it, give you equity. Let's just come. I need you fully onboarded on that. And it took just a little bit in the beginning because he didn't, he was a bit skeptical that the that the masses of Egyptian population were tech savvy and they would use their smartphone for ride hailing or for other services. And I think when he started getting a bit of assurance that, oh my God, there's a whole other Egypt out there that's 110 million population, and it's not just the 2, 3, or 5 million we encounter with. And I think that was an eye opener for him, and it gave me a bit of credibility that
Mm.
it works. And so that's what happened.
Now, you may have been loss making, but as you said, I mean, that's quite normal for most companies. I mean, Uber was loss making for many, many years with their ride hailing. And as you say, in those years, if we reflect back, it was all about just bringing on new business. And geez, we'd worry about profit in 20 years' time. That's tried and tested. I mean, Amazon is a very similar model for most of their life. They were loss making. So, your story, though, how does that proceed? Because how did you go and get either the drivers or the clients? Because this was new, for Cairo, I think, where you started. This isn't something that just feels like immediately you're going to have a queue of drivers coming out to you and saying, "I want your app, and I'm ready to go and start, doing this ride sharing business."
So these are two questions. I'll address the loss-making one first. The loss-making one, Uber and Amazon were born in the United States of America, where you have abundant funding, abundant amount of VCs to raise money from, and different stages of VCs. So if you perform well with a Series A round, it's easy to get into a Series B, Series C, Series D, and there are different pockets of money so long as you're meeting your targets. The problem in our end side of the world is that it's very easy to raise 10, $15 million. Now, try and raise $100 million to continue growing a loss-making business. It's not that easy. It gets challenging. And that was what I saw coming around the corner. And in fact, once interest rates started to increase in the US, money started to dry up very quickly on our side of the world. And I can name you at least a handful of startups that went bust, simply because there was no funding to promote their growth. And a lot of these VCs reached out to us to try and support. And when I sat with the founders and I said, listen, guys, when I met you 3 years ago, you had great unit economics. What's happening now? And then the message was shareholders were pushing us for growth and not unit economics. Now the song has changed, the tune has changed. So I'm very glad that we did what we did when we did it. Now with
Let's
regards to
The other question we can come back to, but while you're talking about investment, has that landscape changed? Because I mean, you've got some great investors. I mean, Apis, for example, very well known, globally. And I've chatted with a number of the external investors over the last couple of weeks, and my sense is that there's been a big retraction for putting money into Africa, North Africa. Um, there's a huge demand going through into the United States as always, but obviously the AI revolution is pushing people, to go if it's not got AI somewhere in it, they're going to force it in. Otherwise, there's no money going into that. And at the same time, there seems to be less interest in Africa. This feels like it's also worsened by the fact that, like you said, they've got those relationships. You've done something, you've failed, you've gone in the same environment, you're in Silicon Valley, you're part of the same ilk, you might have gone to the same schools, you're networked. You can have a couple of failures, but the attitude is there. The guy is in I don't know, Y Combinator, and voila, you go and do a few things, and then you suddenly become the CEO founder of an open AI. We don't seem to have that, or historically we haven't had that in Africa. Do you think it's getting better? Are we seeing more interest, more funds coming through?
I admit we've been quite consistent with our fundraising, and we have been quite lucky or quite fortunate with our fundraising. So we've fundraised in 2018, 2021, 2023, 2024, and the last round was 100 and some million to acquire a Turkish business that's performing exceptionally well. So we've been cumulatively, maybe we've raised 400 or $500 million in total. So, however, the narrative is clear. The narrative is we're we're a tech company, so we have a very, very strong focus on technology. We're very, very strong on growth, and we're strong on profitability in dollar terms. So the problem with Africa, APIS is mostly a fintech fund. They supported us enormously in our 2021 transaction where we were putting everything together. I think they signed a $50 million check at the time. DPI also invested, quite a few invested. But if I'm trying to dissect what's happening, Africa has a currency issue, devaluation. And if you have, even if you're performing extremely well in local currency, but there is a steep devaluation, it's not good for investors because they have hard currency. And what's good with our business is it adjusts very quickly because the average loan size is dollar denominated, or because inflation is so high and inflation is linked to the exchange rate, that our portfolio or loan book adjusts to foreign in dollar terms. So we've been consistently growing in dollar terms, and that's the beauty of the business.
Okay, let's go back to the other question then, um, and that was how did you get the riders to learn about you, to sign up to you, to trust you, and to actually become, part of the service?
So we had a huge database of drivers because we were selling motorcycles, we were selling tens of thousands of motorcycles, and we were selling three-wheelers. And so we first tapped on those, and then we used the distribution we have and the contacts we have in the 26 governorates of Egypt to promote the acquisition of drivers as well. We also had an online form, so you can download the app, plug in the online form, and join. If my memory serves me right, there was an inspection at the time just to make sure you have the vehicle and make sure the vehicle is in good shape. But that's what we did.
Sense is that you don't do these, or you weren't doing these from gut reactions. You're very studied, and focused. I mean, that story from earlier where you drove out for 3 hours and you meet the people and you actually talk and see what's going on. I read elsewhere that you did something similar, with the drivers. And then just from listening to the conversation, you seem to do a lot of research. Is that reasonable?
I seem
As
to
in,
ask a lot of, I think I ask, I don't know research is the right word, but I ask a lot of questions. I'm curious by nature, and I like to get to the bottom of things. And I remember as a child, uh, the, the one word I had at the tip of my tongue was why. I always had why. Someone would tell me something, I said, why? And just keep on. And I'd like to get to go through the layers.
was it stressful? I mean, when you said that you're going into 2019 and you're loss making and you've got this 1 million bleed that's happening, every month. Was it? I mean, for me, I'd find that incredibly stressful. I'd think about all the people that have invested in what I'm doing, and I'd worry about the future. I'd see COVID coming along and be able to see what's going to happen and worry how I'm going to have cash flow going through to the next 6 months. In my imagination, it feels it doesn't it, it feels like a very difficult period. I was quite happy not
So
having
it
that
was
stress.
actually it was incredibly stressful. So it was very strange because I had I had uh, I had in 2018 I managed to do a small. I sold a little bit of my shares in 2018, and I personally made a little bit of money. And you would think that I would be partying like it's 1999, but instead I was as stressed as ever in 2019. And it took me all the way until summer of 21 to breathe again. And these 2 years were probably some of the probably most difficult years that I have faced. Those plus the 3 months in 2014, between February 2014 and June 2014, when they aborted the importation of tuk-tuks. So these were the two most stressful periods.
Well, how do you get through it? Because I find this is such an important thing for anyone that wants to go and set up their own company. And maybe it's one of the areas that everyone talks about how you find, VCs and how you go and put your pitch deck together and, where to go and look for partners and so forth. But I don't know if they talk enough about the stress and the courage and the strength and how to go and manage that to get through these difficult moments. Because I've never met someone who's successful who hasn't had some incredibly difficult moments.
So I think a big part of it is knowing that good times don't last and bad times don't last. We live in an ever-changing world, and there are tides. And what's important is as you navigate your own journey, because every individual has their own journey, is that, okay, we have a period of rain. And during that period of rain, if you know that there will be sunshine at the end, and the conviction is there, you wake up every morning, you put cold water on your face, you motivate yourself, and you push forward. Then, of course, there are the supporting things. So, one, try and have a good time. Try and experience joy and happiness and sense of humor, and meet your friends and social warmth, and all this is incredibly important. And then time alone. So I try and do my Tai Chi. I practice Tai Chi. I've practiced it for 22 years, on and off. Obviously, when I'm under a lot of stress, I try to be more diligent about it, try and put at least um, 2, 3 sessions a week. That would help me. Going to the gym helps a lot. If there's a social sport like paddle or helps a lot. So these are my 2 cents on that.
So a mixture of physical, mental activity, and I guess the partnerships and the people that you've got to go and bounce off must be incredibly important. That network, you can't do this, alone. I don't think I know anyone. People talk about now with AI, and we're going to have large language models, and you're going to see the first billionaire who's sit there behind his computer and he's just worked it out with an agentic agent. This doesn't feel realistic to me. People need people to go and build these amazing companies.
I think people need people, full stop. People need people. Like social warmth is important. Bouncing off ideas is important. I think it's a different energy. There's an energy there.
How many people are in the company now?
Thousands. So the tech team alone is about 120, 150 people. And then we've got a lot of field agents for distributed all around, tens of thousands of people collecting, signing papers, things like that. But the head office is about 1,000 people, 1,005. Turkey has 1,000 people as well.
So I think it's safe to say you've reached the point where you probably don't know every single staff member anymore. And
100%.
and I'm interested to know what that journey was like. Your starting point there with you and Ahmed and an app and some conversations, and then you start to grow and I know there's a pivot in between and some fundraisers and so on. But at some point, that group of people becomes 10, and then 100 and 1,000. How did you find that journey? Was it something that was easy, or have you had to continually try to reinvent yourself as a CEO as you've gone through that?
I had to reinvent myself as a CEO. I had to, but it comes with the aging as well, right? So during a period of 15 years, the 30-year-old is not like the 40-some-year-old, and so there's also maturity that comes into play, and but for sure, one has to readjust. So I used to be a branch manager when I first started. I used to wake up. I used to review the credit cases one by one. I used to go home with a whole pile of applicants, and I had to review them. And I'd stay till 2 a.m. saying, "No, this guy, no, this one, yes." Asking for an additional piece of paper, and then you promote yourself to an area manager, then COO, then CEO, and you learn on the job. But I think learning on the job is interesting.
Did you ever worry as the company was growing whether that your incredible entrepreneurial skills wouldn't transition into being a CEO of a large corporate, with thousands of employees on a global basis, and obviously probably a very different structure, lots of Unfortunately, as you get bigger, it's almost inevitable. Silos and hierarchies that get formed, you know,
I
platforms that you
never
have
worried about that.
never worried about it.
No, no, that's not something I worried about. There are a lot of other things I worry about, but not this.
I don't know whether I should ask you what else you worry about. Maybe I'll leave it there. You can tell me later, and we can think about whether to do
What do I
it.
worry about? I don't worry about a lot of things. So it's not something that happens to me. I don't, I'm not a person who typically worries, but I think if you practice the law of acceptance, then when things happen, you accept them, but you try to push forward. I think that makes worrying a lot easier.
Can you tell me now then, fast forward, because I do want to go and think about the future as well. So, how the merger came about with the next sort of pivot in terms of your scale then. So, you know, you've decided to start winding down the ride sharing. You're refocused in terms of an app and lending. Um, you've taken the decision with Ahmed to basically build the platforms and recruit in, you've got the VCs and others backing you, and you're starting to have success there. Then, obviously, at a certain point, you go and you go and merge with a group from the Netherlands, if I've got that right. Can you tell me that story?
No, no, no. We didn't. We didn't. We didn't. We just relocated our head office into the Netherlands. It was a
Okay.
part of restructuring, and it had benefits that then you can raise. It's just re-domiciling and having the company offshore.
Yeah. Is that
But then
something?
the next big move was Turkey. Turkey was a huge move because there we decided to expand into another market through an acquisition that was probably one of the largest moves I've made. And maybe I wasn't very conscious of what I was doing when I was doing it, but I'm very, very happy I did it. But
Yeah.
I was negotiating valuation north of $150 million acquisition when the money wasn't readily available with us. And I was fundraising, acquiring a company in parallel. I really love the management team. They have a very, very similar culture to us. They're doing work that's incredibly similar to us. And they were leaders in their market. And I just saw the potential in 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 what they were doing. And that's what motivated me. That
Was that
took us,
no,
sorry,
carry on. That took, you were saying that took
that
us.
took us from, that took us nearly a year and nearly a year and a few months, 15 months, 16 months to close this transaction.
How did you get into that transaction? Had you been looking for something to acquire for a period of time? Had you been specifically looking in places like Turkey, and you've also, I think, made acquisitions in Pakistan, um, and I think where else have you made acquisitions? There was one other
No,
country, but
these
anyway,
were the two.
these were the two.
Yeah, we set up shop in the UAE. So basically, I'm 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 a deal maker by nature. I like deals. So if there's a deal that's happening, I like to. It's something that excites me and motivates me to do deals. And I thought, okay, we're probably the market leader in Egypt. What's the next big thing? Egypt's gonna keep on growing. We're gonna add services, add customers, launch the card. We had the product roadmap was clear and the growth was clear. So what's the next big move, right? Because if the company's, I can't spend my time growing the company 20% year over year. That's not my job. That's the job of the managers in the company. My job is how to make the company move from 1 billion to 5 billion, from 100 million to 1 billion. That's my job. And I thought the best way to do that is to have different growth avenues in different countries, and then this multiplies my growth by definition. And then I wanted to capitalize on our know-how in the lending business and on the technology, whether it's credit scoring, whether it's risk management, whatever. And I was just looking out. And then I had a meeting with the, if my memory serves me right, with EBRD who were interested to invest with us. And then they pointed up this company in Turkey. And then I said, then I had an advisor who told me, let's look at Turkey. We went around in Turkey. And then at half the trip, I told him, do you happen to know this company by any chance? And he said, oh, I know one of the shareholders. Let me call them. He called them. He told me, do you want to go and meet the management team? I met the management team and I said, that's a slam dunk. I said, we have to do this. Putting these two together in two countries, each one has 100 million population. Turkey's economy size is 3 times Egypt's. That's a very strong marriage. And that's when I started meeting the shareholders, lobbying with my board members, raising funds from external people, and until I closed it in summer of 24.
Got a couple of questions that are coming in. Let's see if we can get through a few of these now as well, and then come back to that topic. So I like this one. With no code SaaS platform, this is from Philip Diaga. It's quite difficult to scale. Our clients mostly sell to consumers and make a lot more money than we do on their B2B. No, it's a difficult to answer. I'd like your thoughts.
What's the question?
We have a no-code SaaS platform that is focused on B2B. This is quite difficult to scale. Our clients mostly sell to consumers and make a lot more money than we do. I'd like your thoughts. We can come back to it as well. Maybe Philip a
Yeah,
bit
I
more.
know. I think
Good.
B2B and SaaS, I think whoever owns the customer is king. And I think one should be 100% consumer centric. If it's going to be a B2B solution, then it has to be really integral to what they do, and then have a big value added to them, or else it's hard to make big money off of that. It's a tough market.
Very much. From Yasser, are you using AI in the company? I wanted to ask this one. So,
We're in some domains. So Ahmed is much better suited to answer this question, but in some of our customer, how we respond to our customers, the bots, the responses, the call center, in some of our credit scoring models, in the behavioral models, there is a bit of there's also a module, a large language module that I can ask basically any question about how to increase profitability. What is my riskiest loan book? Who should I fire? Should I promote? Just ask any question, and it answers you because it's plugged into all of our data, which is also interesting.
what's your thoughts on micro insurance? Obviously, you've built your success on micro lending. What's your thoughts on
Yeah.
micro insurance?
For Egypt, we're not yet ready for that. For countries like South Africa, it's essential. So it depends on the market needs to be ready for that product. I don't think in Egypt they tell you, oh, you're giving us money from one hand and you're taking it from the other hand. But micro insurance in South Africa is an integral part to the lending ecosystem. It's
Mm.
an easy cross sell.
Well, as you've mentioned, South Africa, is there plans afoot, or is there anything you can talk about there in terms of expansion that you're investigating or you'd like to go and explore further?
We've explored for a year, also looking at partners there. We weren't able to reach an agreement, but it's a very interesting market with a lot of the work various players are doing. I've looked at also publicly listed people who are doing consumer finance. Quite interesting market. It's a big market and more developed than Egypt
Do you not think it's
technologically.
yeah? I mean, I sit here in Cape Town and just sometimes feel that we've got so many fintechs and there's so much going on. I often wonder whether it's a little bit cramped at the moment with the number of participants. But do you see it that way?
No, I've looked at the numbers of a few companies and growth is very strong. So And then they build, the good ones are building the right ecosystem for the customer, whether with payments, with insurance, with fee-based revenue, so I think there are lots of interesting plays in South Africa.
You said something earlier that's got me thinking in the fact that you see yourself as a deal maker. I thought that was very interesting. Um, you've also talked about in some of the articles that I've read, the kind of drive to go and service those communities that are underbanked or underrepresented in financial services. Can you talk a little bit how you marry up this, the deal making and wanting to make a difference and having purpose in the products and services that you offer?
Marrying them, I think they're separate but connected. So I've always wanted to have. I believe people are agents in the world, and they're either agents for good or for less good. And I wanted to be an agent for good since I was at a very young age, and it was a whole journey. What should I dedicate? Because what you really do in your life, your career is what you do, right? So and if you can dedicate this, like doctors are super noble, teachers are very noble. I knew I wanted to make money, so I said, okay, if I can make money while providing access to finance in underserved communities, that's a great win, because I know that the purpose of my career is benefiting the greater society. And I've experienced the power of leverage as a company on my own, and I know the power of leverage for small and micro businesses is a multiple of what we experienced. So that was my motivation there. With regards to deal making, from if I think finding the sweet spot for two entities or two parties to agree is the most difficult thing, and there's a lot of psychology in it. So I think the bottom line is people are always listening to themselves and rarely listening to the other side. And even if they listen to the other side, they take it from an aggressive point of view, or they're negotiating with us, or they're pushing hard, but sometimes if you listen with an open mind, you can understand the underlying need they want, or the underlying wish they have. And sometimes you can provide it for them, not exactly in the way they request it. So, and I think that's the big trick, is to
Mm.
know what the other party really wants. Someone can be negotiating price. You think, oh, they want us cheap. No, they don't want you cheap. They just want to make sure they get a good return. Okay, let's address the return issue, not the price issue. And these are two different conversations. And I can tell you 100 examples of that.
Mm. It's very clear just on this short conversation that you're a very charismatic, person, and I can see clearly that over your career, your ability to generate buy-in and support, and to build your network, to come in to go and drive these ideas, um, must have been a very powerful asset that you have in your armory, which has helped you to succeed. Was that something that you've kind of had to learn, or were you just one of those few that was just born naturally and had that ability to negotiate with people and bring gravitas to those conversations?
Uh, it's a skill that has improved over time, but I think I've been somewhat talented with that regard. And I think it boils down to having a clear chain of thought. If there's a clear chain of thought and you can convey it clearly in a detached form with a little bit of sense of humor, then it works
Mm.
really well for you.
And the storytelling aspect, so facts, I don't know if facts sells. I get the sense
Yeah,
when, especially fintechs, you've got to come up with a good story.
stories are very important. And I like telling stories, even socially. So it's something I enjoy doing.
Better go back to the questions on the chat. I'll be told off if I don't try to cover everyone's. Timbo's, both the mobility and fintech businesses have powerful network effects. How proactive were you with your strategy and the go-to-market to build for these network effects? I think it's a great question.
Uh, we were somewhat proactive, but we could have been more proactive. So referral schemes we didn't have, discounts came later, and there were some tools that came in later rather than earlier.
If you go back, what would you do differently?
With the ride hailing or the fintech?
On the network effects, because I mean, obviously those are. I mean, it could be either in either of those scenarios.
So
Anything
I
would.
think I'm still in it. I think we're still trying to promote network effects as much as possible, and we're trying to gamify experiences to make customers stay longer, more sticky, churn less, and promote other customers and create network effects. What we've used social networks on is credit scoring. So if you have a network of people and you see them connected to each other, who are the good borrowers, who are the bad borrowers, and if you within your network you have more good and less bad, it increases your credit score. So this is something we've already used in our
Kagisa says or asks, for your lending business, what challenges did you encounter for the initial funding for the lending book? That's a great question. I'm sitting there as a bank. I don't want to lend out money to a market I won't even tap into.
banks. I think I used to spend years. I spent years going from one bank to another, one bank to another. And at the time, I was meeting with a small credit officer that I had to convince with my idea, and then take it up to the risk team. And I had to understand how it's maneuvered inside the bank. And then I understood what are their constraints, what are their risks, how do I give them comfort on it. It's just a lot of lobbying and a lot of time selling and convincing, and I did that. And then a very, very important point is, if you promise certain numbers at the end of the year and you deliver them, you give the banks a lot more confidence, because if I've promised the numbers and I've delivered them, then they have more confidence in the numbers I'm promising at the end of the following year. For some banks, I gave them screens of our collection and portfolio performance. So I gave them in the bank live screens. So I would just see what are they most concerned with, and I try and give them what they want.
I get the sense, that a lot of your success has been from being able to read the market, to go and make very good, accurate predictions of where opportunity lies, with a lot of thought, with a lot of chatting with people in your network. I don't know. You said it's not really research. It feels like some level of research, to me. And that's allowed you to have, firstly, to find the areas to pivot into, and then have that ability to sell the story and to bring people together and convince them that these are good pivots to go and take. So you certainly don't come across as someone who wants to tread water, count their laurels, and just build off what they had, yesteryear and the year before. A lot of large corporates could learn much, from the way that you strategize. But my question is, now we look forward, where do you see the next, pivots? And I hesitate to go and throw in a few suggestions, but obviously AI is one big potential. And the other one is potentially around crypto and stable coins. Where do you see, or how do you see these playing out, and what opportunities, are you interested in from these or other technologies or other social changes?
I have to admit, AI is a tool to better serve our customers and give a better experience. But I think the market is huge in what we're doing. And if you ask me what my immediate strategy is, it's to grow into other countries in the GCC, possibly Saudi Arabia or others. And then UAE, we launched earned waged access to 100,000 loans in the first year with 3 people. We're growing into unsecured lending. Pakistan, we turned around the bank and we're launching our app and card very soon. So every country has its journey. And then there is the linking the countries together. So if you have a huge base here and a huge base there, there are some natural synergies like remittances. So transfer of money and remittances. So Egypt collects 39, $40 billion of remittances a year. Pakistan uh, also tens of billions of dollars. And so how do you connect all these ecosystems together? And that's what we're how do I move from 2 million active customers to 10 million active customers? This is what I'm really trying to solve for.
Do you think stablecoin is going to offer an opportunity there for organizations like yourselves for that, especially for cross-border?
I think very highly of stablecoin, and I think there's a lot of potential. Regulation has to allow it. So in some countries, regulation allows it. In some countries, it doesn't allow it. And it's also a hedge in a lot of these emerging economies to so how does it compare to gold? You promote gold, you promote stable coin, and then everything that follows from there.
I think we've got 3 minutes left, so it's probably going to be the last question. Unfortunately, I was trying to think. I don't want to ask a negative question and say how AI is going to take jobs. So I'm not going to ask that. We can have that debate at some other point in the future. I'm interested in Egypt and the VC and the startup scene. I'm guessing that you still are quite interactive and you're meeting many people who are participating in that space. And I guess that Egypt, like other countries, has probably got a significant amount of people doing fintech, but there's agri-tech and other startup communities, as well. What does the future look like? Do you see it as bright and empowering and opportunities are opening up, at a rate that we've never seen before? And whatever I guess the view is, what's kind of driving it? Are you seeing these internationals wanting to get into North Africa, Egypt, the Middle East, and so on?
So I think I'm gonna answer your AI question very fast. So yes, AI is going to take jobs, and it's gonna take jobs in the millions and tens of millions, and a lot of, and if you're going to fathom the power of AI, you need to think of a whole different world than the one we exist in, and then let your imagination run wild and think which jobs are going to get disrupted in what magnitude. But it is totally disruptive, cross-sectional in all industries. So it is a game changer to the world. In 5 years' time, the world won't look like now. With regard to the Egypt VC scene, I think we got a hit post-COVID and post-interest rate hikes. I think Egypt in the last year or so has performed exceptionally well on a macro, and we have currency stability. Inflation is going down. So I think the foreign reserves are going up. FDI is coming in from the GC enormously. So I'm very bullish on Egypt, and I believe VC money will come back to the magnitudes of pre-COVID.
And yeah, I think we've run out of time, unfortunately. Just thank you very much for joining us. To everyone that was on the call, thank you for posting the questions. As always, I'm sorry we didn't get through all of them. Hopefully, we got through the more important ones. Up next is going to be Flutterwave and the founder's story there. That's the 19th of November. I think Money Pointer in the wings, waiting for a date to be set there as well. As always, big shout out to AWS Startups and Silicon Overdrive, so particularly Henry Zietzman and Ross Davey for their support. We wouldn't be doing these without that. And then to all our ecosystem partners, Africa Arena, Chisel, FDC, Endeavour, CrossFin, Future World, Innovation City, and Henley Business School, thank you very much for your support. With that, everyone, I hope you have a wonderful afternoon. Mounir, thank you very much again, and I hope we chat again
Thank
soon.
you. Looking forward to it. Thank you.